Hello and welcome to GCV Analytics Webinar. My name is Kaloyan Andonov and I am truly delighted to be your host today. In this webinar, we are going to take a look at a sector that is very close and dear to our heart at GCV, namely the media sector, which is also undoubtedly one of the most disrupted and dynamic ones out there. I have along with me today my colleague Jim Mawson, founder and editor-in-chief of GCV. And I am very happy to be accompanied also by our guest speaker, Vinay Solanki, the head of Channel4 Ventures. Vinay has been leading corporate venturing for Channel4 since 2015, and after its unit rebranded in March last year, actually. Previously, he served as Director of Strategic Development, focusing on partnerships and M&A at Getty Images, and also he's worked in strategy and corporate development at Liberty Global. He holds a law degree from University College London, as well as an MBA from Imperial College London. So welcome, Vinay. Real pleasure to have you here on the webinar, and really excited to be talking to you a bit later.
Thank you. I'm delighted to be here.
Right. In terms of the agenda for today, we're going to take a brief look at the data on the sector from our latest issue of the magazine, which will be followed by the discussion with Vinay. We may take some questions from the people watching us live, so I'm taking the opportunity to remind everyone that they can use the Q&A feature on Zoom. But before that, I'm going to hand over to Jim Mawson for a few words about who we are and what we do at GCV. Jim?
Wonderful. Well, let me say thank you so much, Kaloyan, for your hard work in preparing for this webinar. Obviously, this is the sort of trophy piece coming out of the monthly magazine that we do, where we looked at a deeper dive in the media sector alongside a number of other topics. And let me add my thanks to Vinay for being able to join, and it's been really exciting to see the development work you've been doing at Channel4 Ventures. But a bit about us, obviously, Global Corporate Venturing is one of the publications we do at Mawson as a publishing company, alongside Global University Venturing, Global Impact Venturing. And effectively, we try and ask two pretty basic questions at GCV. Who does corporate venturing? And what do they do? So we track more than 4,000 corporates around the world that invest either directly in startups or indirectly as a limited partner in venture capital funds, which then go on to take those stakes. And obviously we track a lot of deals, and Kaloyan will follow up about that. So the who and what basically is the heartbeat of what we achieve to do, and that goes into the GCV Analytics, as well as creating some of the data that we can use for the GCV Connect, powered by Proceeder platform. And the training and educational piece through the GCV Institute all comes together through the Trade Association or Leadership Society membership, so that the main corporates, the top 20% who end up doing 80% of the deals, can connect better with their peers, and also with the wider venture and private equity and entrepreneurial ecosystem through Global Innovation Venturing, which is chaired by Scott Sandell, the managing partner of NEA. But obviously, it's not just the words and data that we do. We also end up bringing together people through the Institute, both virtually and in real life, but also through our events. And the upcoming events we have is a digital forum at the end of July, 21st and 27th. That will be an online platform as we finally emerge from COVID to enable people around the world to connect up on the thought leadership. We'll also be announcing our GCV Power List on the July the 21st. And then in the autumn or the fall, we'll be back to live events, in real life events, through the GCV Symposium on the 3rd and 4th of November around COP26 in London. We've got the GCVI Summit in Monterey, California at the end of September. And we've got the GCV Asia program in mid-November in Tokyo, hosted by Sony. The GCVI Summit is normally about 800 people, but for all of these programs, we'll keep them slightly more socially distanced. So we'll aim to have the right people, as well as lots of good, fine times to be had. So that's all from the sort of the highlights of where we're at the moment. I'll hand it back now to Kaloyan to give us a quick overview on some of the data that you've been seeing.
Thank you, Jim. Now that we're done with the announcements, let's take a brief look at the data on the media sector from the latest report in the May issue of our magazine. So as this slide illustrates, both the total capital estimated in rounds backed by media corporates and the number of those rounds stayed for the most part flat on a year-on-year basis. As you see, comparing 2020 with 2019, both the number of deals and the total estimated dollars stayed kind of flat. If we look at the exits on the following slide, we see there was a slight growth in terms of total transaction volume year over year, but the estimated total dollar value actually plummeted from a little over 14 billion in 2019 down to 4.28 billion in 2020, which of course is easy to explain with the shock caused by the pandemic. In terms of the corporate-backed deals in pure play media businesses, they registered a 9% increase in terms of transactional volume in 2020 versus 2019. However, the estimated dollar stayed again somewhat flat. Now, more notably, there was seemingly from the pure number of funding initiatives, a very slight growth, but the total dollars in those initiatives nearly doubled on a year-on-year basis, even though it might not seem from this graph. And this, of course, may likely be attributed to the fact that there was a huge flood of liquidity in both public and private markets last year that we witnessed. And on the very last slide from my very brief overview here, I have tried to summarize some of the general points and general trends in the sector according to what experts say. So we've got a couple fairly grim forecasts from Accenture. There is according to whom there's there's going to be a decline in global household expenditure on media and entertainment over the next couple of years, as well as dropping advertised spend over the next couple of years as well. The World Economic Forum identified several major themes for the media sector, which could be summarized in the following way. There is the ever-increasing consumer demanding. There's the ever-increasing expectations on part of consumers in terms of their end-to-end user experience. There's the growing challenges for monetization, which is something that's accompanied the sector for quite some time already, I think it's fair to say. There's also the need for business models in the sector to evolve from the ad-based model to something more similar to a subscription-based model or something else altogether. There's also the possibility of more regulation coming down the road. However, experts do not believe regulatory hurdles might hold back disruptive forces that are at play. Despite this somewhat challenging and grim picture, there are and there have been subsectors and areas within the media sector that have seen much growth and will likely continue to see it in the foreseeable future. Fields perhaps like ad tech and digital marketing, gaming with the rise of esports, virtual and augmented reality, which is expected to be boosted by 5G, and so on and so forth. So with that, I kind of conclude our brief overview. If you're interested in GCV Analytics, you could visit it as gcvanalytics.com or contact me directly via email using the address that appears on the screen. Now, let's open the discussion with Vinay, however. That's the really exciting part of today's webinar. So, Vinay, once again, delighted to have you here. Let me start by asking you to please tell us a bit more about Channel 4 and Channel 4's venturing unit, how long you've been doing venture investing, and what your mandate is.
Sure. So Channel 4 has been around since 1982, at a time when there were only 3 TV channels around, and hence the name. Channel 4 is a very unique media organization. It was set up at a time when the government, in a very enlightened moment, said we want to create a media organization that can help with informing debate. They wanted to make it editorially independent. They wanted its ownership structure to be independent of a private high net worth. And that is the philosophy that sits behind 40 years of Channel 4. The really interesting thing about that, if you listen to that story, is there's probably no other media company that's run like that. We're completely financially independent. We're owned by the government. We're editorially independent, which means sometimes we challenge the government. And it's
probably not the easiest thing to do sometimes.
It's not many other countries have followed suit, but it's something I think we are, well, I mean, I think it's an important, you look at the media landscape today, it gives us an authenticity to our editorial voice. Doesn't mean to say it's perfect, but there's a real authenticity to it. What does that generally mean? We don't take any money from the government, so we're fully ad funded and have been. That's our primary business model. We are just dancing around a subscription model for our AVOD or VOD business. Our aim is to inform debate. So I don't, I think there is like a question as to that our main purpose is probably to be free. And we've been looking at ways to innovate under that structure. And one of the ways we've sought to innovate is to make that advertising available to startup companies. I'll just give you some data here. So the data is that we make about £1 billion in revenue. We have 24 million people registered on our VOD service, which is half the UK population. We reach, our portfolio of channels reaches 85% of the population in a month. That's 51 million people. 78% of the UK population, about 47 million people, see the main channel, which has all of our flagship shows on it. It's still linear-led. We have some of the highest viewing for young, and I think it's to do with this structure. I think if you look at the editorial and ownership difference and independence, then we have had the chance to develop, probably differentiate versus the competition by having slightly, I would say maybe at times, not always, more intelligent programming, more adventurous programming, which doesn't get you the big, our Saturday night schedule isn't dominated by shiny floor shows on entertainment on the big networks. We're slightly different to that. And we still have some shows like that, but ultimately we make our money by being different, and that's part of our DNA.
And I guess that's one of the reasons why you appear to such a wide, younger audience in a time when most young people are probably watching YouTube. So that's something.
But we have, I said, 80% of all 16 to 24-year-olds for Channel 4 are registered with all 4 of the VOD service. 80%.
80%. That's pretty high, right there. And obviously that creates a huge advertising sort of billboard or advertising platform for brands, whether consumer brands or other brands that may try to reach this sort of audience, and so you are the springboard for that. Now, how do you tie that with your investment mandate? Because I know, aside from investing in media companies, pure play sort of media and media related startups, you also invest in consumer brands, and you link that with advertising on the channel.
Yes, so there's a very broad thesis we have, and I think it's very supported. I've done quite a lot of work on it since I joined. Our main currency is the conversation we have with, tens of millions of people daily or monthly or weekly. And it's across many, many rich tapestries of kind of editorial content, from news to drama to factual to kind of, forget about like life outside and have some to really finding out about life, the real stories. So like, there's all kinds of ways we can reach those customers. It's historically a problem in the venture capital market to use assets like ours at the, at probably the right time to scale. And what we try to do is alleviate that friction by writing checks of 1 to 5 million. So most of the investments we do are consumer. Of course, we have media expertise. So any company that has a broad addressable universe, which we think is a good product and is priced for a fair return versus our equity model, we will consider. So it's a very broad.
What do you consider a fair return? I know this is a kind of a trick question. But...
we look at very similar things to what VCs do. I would say that we have a bit more flexibility in the time cycle. We're a single in-house LP VC fund, and we take the blend across our portfolio. So I think, I'm looking at the blend too. Like, we're definitely looking at ones which can absolutely, there's a high, the greater risk is met by the chance of greater returns. But I would also say there's one area that is slightly different to a traditional VC. We can look at all kinds of businesses. I constantly come across businesses that have been pursuing a suboptimal marketing strategy, particularly usually very reliant on digital. And that sometimes doesn't scale growth. Digital is great. You can spend a lot of money on digital. You can only reach tens of thousands of people. If there is another company competing in your sector, the cost of that digital strategy might double overnight. The benefits of awareness marketing is it's not as specific, but it will allow people to be more aware of your platform, the problem you're solving, the problem awareness. Sometimes they don't know that there is a problem, or they've not even had time to think that they have a problem that this company can solve. You have to raise awareness of the problem sometimes. Then you're ready to go use the company.
One of the major roles of advertising. Now, you did kind of mention that marketing expenses for startups, particularly on things like TV advertising and things like, and more traditional sort of marketing and sort of advertising outlets are a bit frowned upon. So I'm wondering, what is the kind of stage of development of startups that you're looking at? Is it an early stage or one, or is it a more of a mid towards later stage kind of brands that are sort of emerging and trying to make it in the world?
We're very broad, I'd say. We can go pre-revenue with a defined product. In some cases, marketplaces are very interesting, particularly if you have an even two-sided marketplace. You can build liquidity on both sides pre-revenue. It's been very successful in some of the instances I've seen. It creates category leadership for those people who are investing. Marketing should be seen as an investment, not a cost at times. And by the way, that's not a perfect answer. That is, I think it's sometimes companies I see are too cautious on fully investing, and their investors are more cautious on benefits of that investment. We've done very late stage deals, like Pinterest we entered Pinterest at a very late stage, late-ish stage. It was still 2 years before the IPO, and it had very good revenue. But it was effectively a pre-revenue business at the time with a demanding valuation, if I'm honest. And it worked out.
So you're kind of stage agnostic, as long as you see some kind of a potential opportunity with big sort of reward.
Yeah, look, we're looking for the fair price. Look, we don't need to necessarily We can look at businesses that may have stagnated growth. We might look at their marketing strategies. I looked at a business yesterday, for example, which is, it's interesting. Its revenue line is growing. It's not growing anywhere near like 100% year on year, but it's spending a lot of money on marketing, and I can clearly see how, like, the shift.
How that's helping out.
Yeah, the shift in spend would just change the kind of trajectory of the business. That's the bet we take, and then we're looking for fair and reasonable pricing there.
All right.
On the equity side, usually that means we tag along with other investors, but we have priced a few deals too.
All right. Do you co-invest with other corporates, and particularly with corporates of other media outlets, perhaps out there?
Yeah, we've pretty much invested with everyone, the great and the good. So in a business called What Three Words, we've invested in, alongside Daimler and IKEA, in a business called Meatless Farm. We invested with a business, well, Whole Foods. Whole Foods is obviously owned by Amazon. There are other probably smaller and less well-known corporates involved who are taking smaller minority investments in some of our portfolio. We've invested with a good chunk, but not all. There's probably 400 investment funds in London. But yeah, we've invested with many, many funds across the entire spectrum.
Fair enough. And because you tie your investing with the advertising side of the business, once you're committing capital to a startup, is that startup, is there like a minimum out of it that the startup needs to dedicate to marketing, or is there some kind of conditionality that comes with it?
No, so look, our model is pretty unique. But we say, look, it's effectively a credit note for you to plan and spend your media as you see fit. If you want to take the peak slot, then it's gonna be charged at what it would cost in cash, and then it gets credited off your equity account. We need about £1 million to get to really see the impacts of brand awareness marketing, to build the top end funnel, build the trust and reduce churn, which are the things that you really see from the investments in marketing like this. But like, so it's £1 million. That just give you an instance, that would get you, like 15 million people might see the advert 4 times for £1 million. And that usually is the thing that can really change the trajectory. It's almost, other things have to be in place. It has to be a good product. Has to solve a problem. It has to be a clear, addressable market, which is, we think is watching the telly against the, our tapestries of kind of how we reach them. Has to be a fair valuation for us, or feel like we can make a return from. So yeah, all those.
Sure. And in that sense, what are because it does seem like your focus might be very much on the UK market, but you have invested in companies outside the UK. As a matter of fact, 2 of the 3 exits that you've had are companies that are not based in the UK. There's the Readly, if I'm pronouncing that one right. That's the media. Well, that's the article aggregator service based off of Sweden, and of course Pinterest, in which you had a notable exit there. So could you tell me a little bit more about your geographic scope and what are the sort of markets that you're looking at other than your local market in the UK?
So look, we've got access to, as I said, that 50 million households in one of the most developed, digitally enabled, industrialized and English-speaking markets. That's a hugely valuable currency. And we're fortunate to have that. And that means we can target, as a natural launch pad for US companies. By the way, there's probably more we can do there. But there's US companies, when they think about international expansion, UK must feature in their top 3 countries.
Certainly.
To test that as a gateway to Europe still, even post-Brexit, I hope. But and the language difference. So we've got a very valuable currency there. Likewise, we've, if you're a company coming out of Sweden like Readly, which has a product, you're looking at your biggest markets around you. Germany and UK with the other markets. I think they did do a deal in Germany too, but I don't know whether it was as successful as our deal. I'm not sure, I can't, but ultimately, like they did do deals, media for equity deals in Sweden, Germany, or look to do in Germany and the UK with us, and we're very happy with that deal. I mean, again, if you look at some of the ideas that are coming out, I don't really care where the idea comes from, Kaloyan. I really don't care. I think if it's relevant to UK customers and it's executed well, if it's got speed to market, it's convenience,
then it's actionable.
Price advantage, a delight, if it's delightful, which, by the way, really met all those criteria, then category leadership is something we look at. Can it be a leader? Does it need to be the winner? Can it just lead? Will it end up at the end of the battle and still be on the pitch? These are the things we look at. So
I see. And so you kind of mentioned the things you were looking at when selecting Readly. What about Pinterest? Because that was probably the most famous company within, ex-company of your portfolio, so to speak.
It's they raised a lot of money, in private markets
sure
without a set of revenue, and when any company does that, it's the investor conviction can flip-flop. Right? So I think one of the things I sometimes say to people when I meet people, particularly from outside of London, Channel 4 is a bit like New York Times meets Pinterest. We have a magazine tapestry of delightful. We have the biggest cake making show, which is a very Pinteresty-like show. And then it's called British Bake Off. And then we have pretty hard-hitting news. Like we led on the Cambridge Analytica undercover story, which led to the fines. And that's an extraordinary piece of work, which puts people in peril. I mean, it's an extraordinary piece of work you're doing. The kind of the range of tapestry we have, and like Pinterest saw the editorial fit with us, so they only wanted to work with one broadcaster. That was us. That was per day. So
that's great.
And to be honest, I'm very lucky that we got that deal. I think particularly in retrospect, because obviously it's been a tremendous equity story since and extraordinary.
It has been indeed.
And I believe that at the time, or I believe the scenario could exist where what it's doing could happen. So.
All right, and in terms of because you've already struck some exits, is it how is your fund? I mean, how much capital do you have to invest in? How big is your pool of capital, and does it get replenished from the exit? Does it get replenished on an ongoing basis by the corporate parent? If that's not too much to ask.
It's not a separate fund and not a separate kind of entity where
so it's off balance sheet.
Intangible asset. I'm not really at liberty to say really how that is. My view is it's pretty subscale, and it's we're using less than 1% of our ad inventory at the moment.
Oh right.
So yeah. So
well, at least you would have you could have more potential in the future, I suppose.
Look, I think if you're using less than 1% of your ad inventory, then I would have the view personally that I maybe use more.
All right, fair enough. Fair view. And now on to a question that might sound a little cliche, but it's kind of a must-have question in these interviews. How has your investment unit and your investing activity been affected by the pandemic?
It's a great question. I think this time last year we came up with a kind of 90-day plan on what we were doing. Of course, we were still in shock and figuring out where to buy our resources, and we mobilized pretty quick. If you think about the sectors we're investing in and the problem we're solving, so generally speaking, if you look at does the problem exist, where there's a lack of capital for marketing, that's generally in the VC community, in consumer, that's in digital consumer companies. That's the bulk where we've put our money. Does that problem increase or decrease in a situation where there may be less capital? And also the digital adoption has increased. We've accelerated on key metrics, e-com, buying metrics, our behavior. Also, we've saved a lot. Which opens up new products and services as a result of that. So is there more disposable income? Are people more interested in spending? Are people really interested in well-being and care? Could those businesses accelerate, or would they have accelerated in COVID? And I'm asking a rhetorical question there. I think we all know the answer to that. So we've seen, after probably a stressful mobilization period of like, what should we focus on in the next 3 months? We're working pretty hard at the moment on accelerating, not just like we're seeing live deal flow through. We've continued to make investments, and we'll expect to continue to make investments, based on the deal flow we're seeing.
How many people do you have on your team? Just as a side note.
Moving to 5 people.
Moving to 5 people.
Yeah, so we've been 4 since about Jan last year, and we just hired another person.
All right, so that's great. Expanding the team as well.
Look, there's another couple of impacts from COVID. I wanted to tell you about the role of a media organization linked to our history. Media, if you take a dump pipe or like a platform streaming, by the way, which have brilliant content, and I'm not going to criticize what's out there. There's some brilliant content on all those platforms. The role of a TV kind of network historically, and this also explains the involvement of politics in some of these, is it brings together a nation. It allows a nation to have a conversation, a common conversation at the same time. I think there's a very clear role for networks as part of that. And I think that plays a very vital role. And post-pandemic, during the pandemic, viewing on our channels went up dramatically. Where did people want to hear the news? Where did they want to see the analysis? Where did they want to forget? But also, if you're living in isolated times, where is the conversation? We saw viewing go up fairly dramatically. And if you're feeling isolated, you might have you have extremely compelling content on the platform, but if you're not part of a broader conversation, well, what's your chance of you continue to watch it? So
the feeling of isolation kind of increases. So
there's a risk of it increasing, right? It's not, I think the networks play a vital cultural role. These sorts of networks to a nation.
All right, and what are the trends that you see or that you have been seeing in the areas you invest in before and after the pandemic? You kind of touched on that, but could you perhaps expand with a few more specific examples, possibly, or?
Yeah, sure. Look, so I think there's one big answer to that, in my opinion, and the one that I think every company is asking itself as they kind of clear up. Fingers crossed, we're clearing up now, post-pandemic. The biggest question I think we are asking is purpose and responsibility to society. And I think you're seeing a wave of startups in that space, old economy, new economy. If you think like we've had an era of building tech companies built on maximum efficiency, autonomous driving, robots. I wonder whether you'll see a counter trend on purpose, particularly around climate change, well, all the underlying things that could mean. I think we're seeing quite a lot of businesses who are commercially run businesses. You've seen the explosion of the B Corp network, and I think that for me is the biggest trend right now, and it's a macro trend, and it impacts, you know, every major company, every single company. I think even, you know, I think Shell made an announcement yesterday about their commitments to net zero.
Yeah, and so did BP. I think last year, just very, very close to the time when the future prices of oil were hitting negative territory, funnily enough. But yeah, so those are in your view the biggest trends. Now, in terms of things on the media side, purely media side of things, I noted on one of the slides earlier that there seem to be some challenges on the horizon for the sector in general. So I'm wondering, how do you see the sector going forward? What is your take?
Yeah, I mean, I am surprised by the data that says global household expenditure on media and entertainment decline.
It's actually not data; it's a forecast by Accenture. So it's
that is high. I still think people are spending. I wonder whether the unit cost is dropping for each player. But the aggregation of services means the unit cost of the supply results in lower expenditure. And I think in the, you know, if you look at the cable era, you probably had a bit more, the cable operators had a bit more bargaining power with the consumer, and they bundle in a lot of services, and there wasn't this thing called OTT. So I think the amount of time that people are spending, although it will be spread, and we're hurting networks like ours because it's spread across more networks, time is the same or increasing. The unit cost, so the time we spend with our customers as an industry is increasing. Unit cost may be decreasing. Of course, that's
so you see that as the other side of the coin of such a forecast,
yeah,
which is
I think
legitimate view. Yeah.
I think there is. Well, I mean, if Amazon was buying MGM, Discovery and AT&T are creating a competitor to Netflix. I mean, Apple's in it. The biggest companies in the world are involved in this game, this conversation through a box with its viewers, consumers. It's a very powerful place to be. I think, notwithstanding that, so that's not me putting a rose-tinted view on that. I think we and people like us will be adversely impacted by you know, a decrease in spend, and that will just accelerate the need for innovation. And I think there's and for someone like me personally, that excites me.
All right. Innovation and challenges mean opportunities. So
yeah,
that totally makes sense. Totally makes sense. And what are some specific changes that you expect to see after the end of the pandemic? So during the pandemic, you know, we've had, I mean, our lives have changed undoubtedly. We've had the rise of work from home and all of that. Do you think some of those changes are here to stay, and how would that impact and tie in with media consumption?
It's a truly great question. It's probably a bit too early to have a firm view. I think our lives are completely changed. I think some of that is for the good. I think work flexibility might mean you spend more time with your family and be more around, you know, the critical events of a family. That, you know, the idea that there was a stigma around people who didn't come into the office is fully removed. I hope, fingers crossed. Certainly I feel I can see anecdotally that that's been a cultural shift. I think behaviors have changed. I'm sitting from the kind of, maybe at this moment in time, UK is a bit ahead in the race against the vaccine. A lot of it feels like it's coming back. Driving around London, and it's really feeling like a normal city again. So interestingly, am I going out as much as I used to pre-COVID? No, I mean, and will I? I don't know if I can answer that, but my sense says no, actually. I think it's smaller, less often. There's definitely a cost. I wonder if that's in the mind of consumers. People do different things with the benefits of more flexibility in their schedule for their well-being. People can become more resilient to staying at home. Is that good for them to stay at home a bit and sit on the sofa and watch
They're all open questions.
Yeah, I see. I don't know. Like, I think, has the pandemic proven, when our viewing was going up, particularly on those big broadcasts and the news coverage we were doing, we were dominant. You know, we were having some of the best viewing for news we've had in decades, literally decades. Before the streaming was around. Does that protect the sanctity of networks like us post-pandemic?
No, they're all rhetorical and open-ended questions. So, have you looked at any new exciting investments recently? And if so, would you like to tell our audience a bit about some, or is that kind of in a stealth mode?
No, we did make an announcement, and it should be on our website, but it's not quite yet. We invested in a property platform which is called Boomin, and it's backed by a serial entrepreneur. It's quite an ambitious investment. We invested alongside some corporate VCs, 2 listed PLCs, and some VC.
What's the business model like?
The business model is a listing platform for property listings, but the UK market context is, there are 2 established platforms in the UK market, and it's effectively a duopoly structure. And this, if it's successful, seeking to break that duopoly with I would say, a daringly ambitious plan, but it's backed by someone who's done it before in another or adjacent space. And it's a sort of deal I'd love to do more of. It's it's a early stage deal. We've gone in on a pre-launch, effectively an extended seed, quite a large round, which I can't discuss.
All right.
It's it's probably one of the largest seed rounds.
Fair enough.
Seed. But
it sounds pretty exciting, though, particularly given that the post-pandemic and the whole recovery phase for the UK economy and for the world economy as a whole after the pandemic, that's expected to be accompanied by sort of a housing demand boom and so on.
Housing market is booming right now. There's some government stimulus in there to keep it booming. So it's always.
Yeah, I think I read, because I'm not based in the UK, but I did read there's a tax holiday for some of the stamp duties and whatnot related to purchasing a home. So and that has been extended, I believe, if I'm not mistaken.
That's right. Yeah, it's fueling the property market here.
So that's a positive sign. Now, one more thing I wanted to ask you. You did mention when you were talking about Redly and Pinterest that you were looking for something exciting, and you're looking for startups that might be the next leader or might be one of the front runners, so to speak. So what are the other criteria that you take into consideration when deciding whether to commit capital to a new portfolio company or not?
Look, you're never going to get all of your criteria met, so you have to exercise some judgment. So is there a problem that they are solving? How well are they doing that? How big is that problem? How do they compete against competition? How well capitalized are they? Who's invested in them? What has been their marketing strategy? What's the current valuation? What's their valuation expectation? is there anything funny in the share cap table that might hurt returns? What's the rough time? We're always kind of modeling on what does it take to get to break even, and generally we're investing in loss-making businesses. Certain sorts of businesses, we are more happy to take a longer view, but in the main, we're saying, look, if this is the last round of funding and they get there, what do you need to believe? How does our media change that? Do we like them? Do we want to stand beside them? I wouldn't underestimate that one.
Legitimate questions. All legitimate questions.
It's probably quite the normal stuff, I think.
All right.
I think there's something very specific. We do dig into the marketing strategy. We look for evidence of what the marketing strategy is. Are they too dependent on a particular marketing strategy? Is it losing fatigue? Could they benefit from awareness marketing? Is this a change in strategy?
For many startups, it's not even well defined, truth be told. So probably a very important and overlooked aspect.
It's hugely overlooked in the digital arena, hugely.
All right. So my last question before we move on to the few that have been submitted by people watching live, which is kind of a cliche question again in the industry, but do you consider yourself more strategically or financially driven, or maybe a little bit of both, and has that evolved over time?
It's a brilliant question, and it's actually neither. I would say that overall, it's neither and both. Strategically, we are more like a Silicon Valley bank than an index capital. We are there to alleviate friction. We take less than 5% of the company. We're a capital provider for a very specific use around a problem.
Do you do debt financing?
We do convertible debt. Equity is probably the best model, I think, for our model. It's where my background is, and the thing I think I know. I think it gives a better alignment between us, the time it takes to make money, and the type of conversation you can have with the company.
I see.
But also better reflects the payback cycles over time. Like, you'll build an equity portfolio, you hopefully end up with some outliers that really generate substantial returns versus the value of the investment. So in that sense, it's like venture. So the overall project is strategic. That means the portfolio is strategic. We are solving a problem for the lack of capital in marketing. That said, we need to cover our costs. And so there's clearly a financial metric that we look at too. But I would say, it's a bit of both, really. I think really we could build a portfolio of quite a lot of investments in adjacencies, quite close adjacencies, which could benefit from the problem we see, which I think is endemic across the digital consumer ecosystem. If there are 1,000 companies which are addressable to the UK consumer market at Series A, most of them won't have invested in brand awareness marketing. That's quite a number of investments, right? So even if you write 5% of that, that's 50 investments we've made. I know we've made 30 investments, so it's in 5 years. So
fair enough. And you've been right in more than 5% of the time. So fair enough. Now let's move on to some of the questions submitted from the audience. The attendees is asking, is there any or much investing in AI or other tools to help media, and more importantly, the public discern opinion and misinformation from fact? So I'm assuming they're referring to things like fake news and so on. And given that you guys led in the uncovering of the Cambridge Analytica, that's probably a very appropriate question here.
It is. It's not an area I've specialized in. Look, I think any platform taking a position has unconscious or inherent bias in anything. So how do you eliminate that? I think I've come across many ways to try and solve that problem. I don't know, if I'm honest with you, who's doing it well. And I think it's a problem I'd love to see solved well, but
we all would.
yeah.
I'd say, yeah, because in recent years we've seen the direct and very dire political consequences of fake news. So it's a very big problem.
Although, you know, the challenge, yeah, how do you paint a true vanilla or true unbiased? Any position you take comes from a position of bias. So there's an inherent like challenge.
Yeah, there is that that challenge indeed. The other query here that I see submitted by Pedro Zawisliak. All of the investments, I think he's referring to your investment. So are all of the investments done for in an equity format? If not, how do you decide what it's going to be? So I'm assuming they're asking if you do equity versus debt financing or both, and how you decide.
I think I also interpret it as, do we invest the cash into our investments? The answer is no. So all of them have been on a media for equity basis, and where we've either received shares or received an instrument, an unsecured debt instrument, which is convertible into shares. Usually those instruments have converted within 6, 12, 18.
All right, so that clears that up. And a question from Professor Martin Hemmick. How do CVC teams and entrepreneurs, I'm sorry, what do CVC teams and entrepreneurs need to know if they want to expand their business or investments to countries like China, Turkey, Russia, etc., where media is heavily controlled or influenced by governments? And excuse me, and he goes on to say, Bertelsmann Asia seems to have managed it brilliantly given their scope, scale, and results. So what's your take on that, Vinay?
I'm going to quickly look up Bertelsmann Asia. This is not an area. This is a question which I think I'm not sure I can answer particularly well. It does look like Bertelsmann Investments has made a bunch of investment in Asia. I think the countries mentioned there are extremely tricky to operate in, and need to. Who's the right gatekeeper? Who, you know, what is the right set of gatekeepers you need to be protected and safe in those markets? That I think they cause nervousness unless you have very deep experience of working in those markets. If you're not from the, so how do you develop that? I mean, I think they will vary by country to country, and there'll be different answers for each of those countries. Yeah, and would be a very. But the political aspect is key, as well as the aspect. All right. Fair answer. So with that, I guess we could wrap it up. Thank you very much for your time today, Vinay. It's been a truly delightful interview. And to our viewers, to all those who are seeing us live, thank you for staying with us till the very end. And to those watching it as a recorded video on YouTube later on. So thank you once again, and have a wonderful day, evening, or afternoon, wherever you might be in the world. Thank you, and goodbye. All right, thanks, Kaloyan. Bye, everyone.